Hi everyone, this is a short screencast for Independent Colleges Dublin for F6 Taxation and the May 2015 mock exam. In this particular screencast, we're going to look at question 6, which concerns really RCT or relevant contract tax, and also a little bit of administration in relation to qualifying disclosures or non-qualifying, and really the requirements in respect to those areas. Okay, so what we have here is an individual called Steve who's working in the construction industry. And the thing to bear in mind there is that certainly construction, and as I said on the left-hand side, forestry and meat processing are the three industries where relevant contract tax is relevant. And what do we mean by that? Well, basically what we mean is that where an individual is operating in that industry and takes on a subcontractor, they're required to detail information in relation to that subcontractor and supply that to the revenue for the revenue to give an instruction as to how much tax should be deducted at source from payments made to that individual. And really the possibilities, as I said in the top right here, are 0, 20 and 35, and really it goes up from 0 really in line with the relevant subcontractors' tax history. In other words, if they're registered, properly up to date, etc., it may well be that they have 0. If they're not, in other words, if they're at the other end of the scale, they'll have deductions of 35%. And you can imagine that for a subcontractor who does a lot of work, a deduction of 35% is quite significant. So really what the revenue are trying to do here is they're trying to guard against subcontractors within these industries really not paying their tax on time, not keeping up to date, or perhaps even not paying their tax at all. So they're trying to regulate individuals who work within this industry. So in this particular case, Steve has a VAT and RCT revenue audit pending, and unfortunately he's made an error in making a payment out to a subcontractor who he thought or thinks is a reputable businessman, and really it's not up to him to decide whether or not the individual is reputable. It's up to the revenue to decide. So he didn't operate RCT, in other words, he didn't comply with his obligations within the construction industry for RCT, and as a result of that, he's in a little bit of trouble. So what the requirements ask us to do, firstly, is just state the obligations, in other words, what he should have done. Also detail the category of default, given the fact that, as we've said above, is that he's not sort of overly bothered about this issue of the revenue audit and whether or not they might discover his action. And the consequences of him doing what he's doing, in other words, of not making what we call a qualifying disclosure. More of that later. Now, the third part here is just this idea of a prompted qualifying disclosure and what would be the benefits of doing that for Stephen, and there would be a variety of them. Okay, so if we look at the answer, basically what we've got here is the first part relates to just the nuts and bolts of RCT, and essentially what the individual is required to do is each time they take on a new relevant contract within the construction or indeed forestry and meat processing industry, they've got to collate details of the contractor, the subcontractor, and indeed the contract itself, and prior to making a payment, they must obtain authorization or deduction authorization from the revenue via the RCT system. So this is all done online. Once he has done that, he will receive notification from the revenue to say, this is the deduction that needs to be made, or this is the percentage, the applicable RCT deduction rate. And as I've said up above, this will be based on the individual's tax compliant history. So those are the key points. Very much online. We're looking for a deduction certificate from the revenue in order to apply the relevant rate, and that rate will be based on the individual's tax history. Okay. Now, in relation to Steve's action, it looks as if it's clearly deliberate. In other words, he is deciding on a course of action that involves really not providing a clear straightforward and honest information to the revenue. And as a result of that, that's really deliberate behavior. Now, if you're deliberately avoiding your responsibilities and indeed tax, the penalties are up to 100% of the tax paid. So that can be quite significant given that the excuse me, the amount was £100,000. Now, 100,000 euros. Other than that, I mean, apart from penalties and interest on top, it may well be that publication in the revenues list of defaulters and possibly prosecution, possibly even criminal prosecution could be at play here. Okay, so those are the key points in relation to his actions. Now, in terms of this qualifying disclosure, fairly easy to deal with this really, because if we're making some form of qualifying disclosure to the revenue, as you would expect, they will want everything. They want complete information in writing. Everything to do with the particular issue. Okay, and in addition to that, clearly it needs to be signed by the taxpayer and must include these two things. In other words, a declaration that everything is correct and indeed complete to the best of the person's knowledge, and obviously a payment of tax. So just think with qualifying disclosures, really, it's more of a question, what would you not include? And there's nothing that you wouldn't include. You need complete information, everything to do with what you've done, the tax figures, the details of the individuals concerned, the dates, paperwork, etc., etc. And then on top of that, obviously sign off and indeed a declaration that is correct and complete, and obviously a payment of tax and interest due. In terms of the upside of making a qualifying disclosure, certainly the penalties could be reduced, and you remember above that they could be up to 100% of the tax due, quite significant, and an avoidance of publication, which would not be helpful for any business, I'm sure, and indeed possibly avoiding prosecution as well. So those are the key points in relation to this RCT area. Do watch out for non-compliance, but also as we noted above, just the basic procedure. So everything online, everything geared to that deduction authorization, which has to be received from the revenue. They'll detail the rates. It's either got to be 0, 20, or 35, and that will be subject to the individual's tax circumstances. Okay, hopefully that's been helpful, and good luck with your studies.